What the hell is that? There we go. There we go. Let's get ready. Here we go. Start streaming. Uh-oh. All right. There we go. Well, here we go. DMAS is here. Way to go. James is here. Les House Dignut. Hello again. Hello, hello, hello. And let's get started this evening. We're all good to go. Well, everyone, how are we doing today? How do we fare today? Today is the 12th of August. A la Dita. Never heard of you. Can't invite you until I actually have a conversation with you. Alrighty? Macy's, DMAS wants to take a look at Macy's. None of this hi, hello stuff. Hey, let's get busy and let's get started. Well, let's take a look at what's going on with Macy's. WBA dropped quite a bit today. Imagine that. Macy's. Let's take a gander at Macy's. We're getting started. We might as well start out with a bang. Macy's, one of my favorite companies. It is over 100 years old and consistently continuing ongoing. The name recognition alone is unbelievable. Let's change this so you guys can actually get a better view. Here we go. All right. La la, ta-da. Okay. Whew. So let's take a look at Macy's. A year ago, Macy's started out at $15.58. Well, look where it is now, $15.81. Not much difference than last year. $15.80 last year, bottomed out at $10.59 twice. Well, it's like 3 times. Middle of September, middle of October, and the middle of November. Beautiful singing. You like that? Actually, it's not that bad. All right. The high of the year was 22.08. High again. Do you remember from yesterday? Hockey Kid 74. Yeah, don't start. Okay, the last 30 days. Check this out. Macy's. Big drop. Check it out. From there, 1950, big drop down to 16.50. That's a $3 drop. Sideways a little bit. Last Monday was the 30-day bottom. 4 days to the upside, 5 days to the upside. Beebly Weekly. Ooh, did you buy Ford or GM today? No, I didn't buy Ford or GM, but I do own some Ford. Okay, ooh, 200 people already. Hi, everyone. I hope everyone found something good to jump into today. Beebly Weekly. Hopefully. Okay, all that being said, take a look. 1, 2, 3, 4, 5 days to the upside from the 30-day bottom, which was last Monday. 5 days to the upside. Okay, great. Do you like Macy's? I like Macy's. I actually have some Macy's. Peluche. Hope that sounds right. Starbucks. Nope. Okay, N-Bell wants to take a look at Starbuckies. Well, let's put Starbucks onto the list. I gotta get a higher thing for my list. S-Bucks. S-Bucks. All right, Starbuckies is on the list. That being said, let's move along. So if I'm taking a look at Macy's, look at the purchase price. $15.82 for tomorrow morning. So if I was going to buy the 1582, more than likely I'd be looking at the 16s. If for some strange reason, the 16s are going from 11 to 31. So you probably get your price in there. Okay? That's if you like Macy's. That's the number one question. The number one question is, does it make sense? It's number two question. Do I like Macy's? And do I like Macy's at this current price, $15.82? Thoughts on FLNG? I've made my first trade today. Enbel, cool beans. Starbucks, push it. Good afternoon. You made your first trade today. I'm going to assume that's Starbucks. All right. Flipper, Mara isn't doing too well. Rated F. Ooh. Well, I think Mara is now on my list. M-A-R-A. Here we go. We'll take a quick gander at that. All right. FLNG. I don't even know why we want to look at that one. Never heard of it. All right. All that being said, I actually like Macy's. Now, Macy's hypothetically should give you a better return than that. Look at next week's 16s. 78 cents a share. Well, I like that one. I actually made it on apps. Well, cool beans. All right. Next on our list, NVDY. NVDY. Somebody want to take a look at NVDY? That being said, well, let's move it on over to NVDY. Yieldman NVIDIA option strategy ETF. Yeah, that's going to be a no. That's it. No. Solutionist, Dividend Stock Talk. Yo, how are you doing, Solutionist? Glad you're doing well. All right, that being said, NVDY, yeah, no, sorry. It's a monthly, and I don't like monthlies. VLO, Valero. Valero Energy. Well, first thing, always first thing I want to see, the high, the low, where was it, where is it, and what direction is it currently going? Well, cool. It's at 151.49. Okay, 151.49 at this current moment in time, right there. See that? So if I want to buy it tomorrow morning, we're probably looking at 152.50, and that's going for $2. Nice. That's over 1%. All right. So it's going to be more than 1%. Look at the chart. High, low, was, is, and direction. Cool beans. Let's take a look. Hey, Flipper, we're going to take a look at Mara in a little bit. All right. A year ago, Valero was at 137.36. Okay. From there, she bottomed out at 120.43, and that was back in November of last year. Okay, she shot up to the high at 185 in April. From there, she's been dropping. Drop until last Wednesday. No, is that right? Last Tuesday. Or last Monday. I don't know. Let's zoom in. Last 30 days. 30 days ago, here we are at 148. Shoots on up to 168. That's a $20 increase. That's a nice increase. And then she drops down here to 141 before hitting 1, 2, 3, 4, 5 days to the upside. Okay? 5 days to the upside on the bottom from last Monday. So I'm getting by more than 1% over here. The number's working great. The chart is working great also. 30 days, 2 weeks ago. Last week was a 30-day bottom. Now we're heading back to the upside. Well, I kind of like Valero. So what does the seasonality tell us? What does this thing normally do this time of year? You know, everything being equal, it looks as if she's just going sideways. Well, I like sideways. Sideways works for me. Because, and I hate saying sideways because it doesn't go sideways. It goes up or it goes down or it doesn't move at all. Okay? All that being said, Valero looks good to me. Next one on my list, Disney. DIS for Disney. Token, what's wrong with monthlies that are paying 1, 2, 3 per month at a $12 share? Oh boy. Uh-oh. So this dude wants me to actually go through these. All right. Drocaton. All right, Drocaton, you want to do this? Let's do this, okay? Let's look at the first one, NVDY. NVDY. Interesting. High, low, where was it, where is it, what direction is it going? Fine, that looks interesting, doesn't it? REMI, should I go 100% SP 500, 15, 20 years? I'm going to say no. NBEL, did I miss Starbucks? I haven't done Starbucks yet. We're going to take a look at Mr. Drocaton. Drocaton. Let's take a gander at it. You ready? Number one, it's a monthly. And why is it that I don't like monthlies? Well, we can't count this one because there's only a few days left, okay, this week. Let's look at next option, all right? Currently, the stock is at 23.93. 23.93. So the closest strike price is going to be 24. Well, here's the 24 right here. The 24 is paying 80 cents a share. Okay, 80 cents a share on a $24 stock. Interesting. Well, let's get my calculator out. Clear. 80 cents a share. Purchase price is 23.93. Comes to a grand total of, ooh, I like this, 3.3%. Okay, sounds interesting, right? But here's the catch. 39 days. Okay, so there's 39 days we gotta go. So, 39 divided by 7 comes to a grand total of 5.5 weeks. So that's 6 weeks. So let's not kid ourselves. 6 weeks away. So I'm getting 3.3%, and I got to carry it for 6 weeks. So I'm going to divide it by 6. There we go. And what does that come to per week? Well, it comes to 0.55. So it's a little over 0.5% per week. All right, well, we all know that 0.5% per week over the year is going to be 26% for the year. Okay, now, here's where it gets a little more uncomfortable. Here's where the chart is at this moment in time. Okay, here's your high. Okay, your high is right up here at 31.75, way up there. And here's your bottom right here, last Monday. She goes up, pulls back, goes up. Great, it's an upward trend. Wonderful. Great, now, by looking at this chart here, can you tell me where it's going to be in 6 weeks? Okay? Because here's 1 week, 2 week, 3 week, 4 week, 5 week, 6 weeks. Okay? That much time is going to elapse from tomorrow morning until this option here expires, in which I'm getting 0.5% a week on. All right. But wait. It gets worse. Now, NVDY. Okay? NVDY. $23. Look at the yield that they're giving you, hypothetically. The yield, 63.85%. Well, that's out freaking outrageous, isn't it? Who pays 63% a year? Who? Well, let's take a look at some historical data. Okay? Historical data. We're going to look at dividends only. And let's see how well they pay their dividends. Now, a dividend is basically the profits in which are being shared by the company to the investors. Okay? It's kind of like greasing the wheels, making us, this is what we earn on our money. Oh, wait a second, hold on. This company has paid for 1 year. One year. That's all their dividends was. 75, 96, 81, 93, 68, 42, 51, 63, 153, 162, 161, 120, 256. Okay? There's no consistency there whatsoever, and it's only been 1 year. So what makes you think that this company, who's only a year, who only been paying dividends for 1 year, is actually going to continue this pace? Has 1 year of history. You want to do it? Fine. Fine by me. You invest your money the way you want to. I like safe, secure, predictable, and consistent. I like consistency, I like predictability, and I like more than ever safety. Now, you want to put your money into a company that's only been around for 1 year, fine, more power to you. Okay, me, I'm retired. I do not have the time, money, energy, or the desire to put my money into anything and wait for it to grow. Yeah, great, they're paying a nice rate of return at this moment. But I like companies that have historical performance, that are constantly profitable. This one has 1 year of data behind it. That's it, 1 year. All right? I like looking at companies that have 20 years of consistent increase in dividends, because that means they've consistently been profitable for more than 2 decades. This thing hasn't even seen 2 years yet. And you're all excited about it. Yeah, sorry, I just don't do it. There's no consistency in the profit. And, if you're consistently profitable, these things should grow consistently. Higher, 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 higher. Not up, down, down, up, down. Whoops, wait a minute. Yeah, anyway. It's just up and down all over the place. Yeah, no thanks. I like predictability and consistency, along with safety. I'm 60 years old. I do not want to have to go back to work. Okay? I don't. It's just the way it is. So let's take a look at another one. MSTY. MSTY. Okay. This thing's only, what is it? 5 months? Are you kidding me? 5 months old? April, May, June, July, August. That's all they've been paying? Yeah, no. Okay? That's two no. ULTY. ULTY is 2 years old, and the other two are 1 year. The other three are 1 year old, and you saying that's a good investment strategy? Okay, should I even go look at what the dividends look like? All right, MSTY. MSTY. Nope, monthly. ULTY. ULTY. Nope, monthly. CONY. No, monthly. Okay, Dracaden. I have no idea what to tell you here, brother. Okay, the 1519, the 15s are going for 70 cents. And we're running into the exact same problem. If I divide 15, all right, 70 cents, clear this, 0.7, divide 1530, equals that, and then I divide it by 6, because there's 6 weeks between now and then. That's still 0.75%. But think about it, 0.75% is not bad. That gives you what, 40% for the year, maybe 30, 35, 40%. Okay, might be okay. But then again, you're running into the exact same problem. Well, here it is right now. Where do I think it's going to be in 6 weeks? I have no idea. Okay, it looks like here's the bottom here. Now she's going to the upside. Great. So if I buy it at 15.19 and I sell the 15th, great. I'm paying 70 cents. Okay, what happens? She goes up. Fine, I'm out. If you like that, I personally don't. I like weekly cash flow. I like 1% per week. That's over 50% per year. But hey, if you like those four, more power to you. Okay, Remy. Uh-oh. I missed some questions. Okay, Remy. Should I go 100% on the S&P 500 for 15 to 20 years? I honestly can't give you advice on that one. Okay, I'm not a financial advisor. I don't know anything about you, so I can't tell you what is right for you. All right. The only thing I can tell you is I can look at the stocks you want me to take a look at. S&P 500. I don't do it only because it's out of my price range. Okay. I like to keep all my purchases under 250 bucks. All right. And I don't know if the S&P 500 actually does. The S&P 500 pay dividends? Like, what are you getting on a weekly basis from the S&P 500? All right. Did I miss Starbucks? NBEL. SBUX. SBUX. Now, I like Starbucks. Oh, look at that. She popped up today. Okay, so first thing, high, low, where is it, and which direction? Is it going? Great. Just to let you know, I do have some Starbucks. I bought some at 80 and I bought some at 90. Okay, just to let you know. All right, so let's get out of that. I don't want to see that. I don't need to see that. 77.03 was the last price. So we're looking at the 78s. Ugh, the 77s. Well, that's going to be a tough one to get your 1% on. Because if you take a look at the price that's listed, 77.35, the 78s are going for 50 cents, not quite 1%. Okay? But if you like Starbucks, okay. The 77s are going for 84 cents. But if you take the 35 off of there, then you're into the 40s, which is a little bit, you'd be better off going for the 78s. Just saying. Neither one of them is paying you 1%. But look at the chart. Here's your a year ago, 100, topped out at 107, bottomed out at 71. Last 30 days, are all right about here. Okay, your high's on the 31st. Your bottom is right here on the 5th. 1, 2, 3, 4, 5 days to the upside, and we have a little bit of a gap there. Cool beans. All right, but look what the top is, 181, and we're here, so we still have quite a bit to go to challenge that 30-day high. Thoughts on ATKR? Are you kidding me? What the heck is ATKR? Now I say that ATKR because I've never heard of it before. Yeah, that's going to be a no. It's a monthly. Boomer Boy, how many accounts do you have? I have a 6. Or do I have 7? I forget. Boomer Boy, put the chart on 4-day chart time frame. What is that going to do with anything? Chart time frame. 5-day, 5-minute. What the heck am I looking at that for? Sorry, I like 1 day, 1 minute. No. I don't like that one either. 1 day, 1 year. There we go. I like looking at 1 day, 1 year. Thank you very much. I have no idea what that 5-minute, that 4-day chart looked like. That is a no-go. That's right, Sammy. Misty Moon in Maui tonight. No idea what that means, but okay. Are you able to do Starbucks? At NBEL, we already did Starbucks. Verizon is a good dividend stock. Well, yes, it is, but it's not a good play for this week. Let me quickly show you why. VZ. Now, we looked at Verizon yesterday. Okay. First thing, as always, the high's right there, lows over here. It's going to that side, that direction. Goes here, there, blah, 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 all that kind of stuff. So let's take a quick look. $40.50. The 40.50 is going for 34, which that's going to be a no because the numbers just don't work. See, if I'm paying $40.53 for it, and I sell somebody the option to buy it from me at $40.50, I'm losing 3 cents right off the top, but it's only bringing in 34 cents. So what am I walking away with? 31 cents? Yeah, that's not 1%. Okay, now I like Verizon. I just don't like it this week. Sorry. I see we have already different goals at this stage. Well, you're absolutely right, we do. Okay? Me, I'm 60 years old, I'm retired. I would not trust my money to a 1 year old company or a 2 year old company. Sorry, it just won't do it. All right, now you're younger, I'm assuming, because you apparently have no problems putting your money into a company like that. Yeah, no thanks. What is that platform you trade on? This is called Think or Swim. Okay, that is through Charles Schwab. You can actually download that right onto your own computer. These are single stock dividends, except for ULTY. Okay, they're all the same company. Okay, it's still no to all four of them. Sammy said, no, not even acceptable. We have different goals, I think. Yes, we do. Ticked off Matt, NVIDIA, no. How's that for an answer? No, no, no to NVIDIA. NVDA. The reason NVIDIA is a no, let me show you what kind of dividends NVIDIA pays. NVDA. What do you think? NVIDIA paid 2 dividends. March 24th, June 24th. Oh, wait a second. And it was a 1 cent dividend. Yeah, no. Okay? And it gets worse. Hold on. It gets worse with NVIDIA. Let's go take a look at the summary for NVIDIA. Alrighty, take a look at this. Your dividend is 4 cents, and your yield is 0.04%. It's not even 0.1%. It's like 4/100ths of a percent. 4/100ths of a percent, and you're putting your money into it. But wait, it gets worse. Check out the book value for NVIDIA. This is the actual valuation of the stock. $3.53. So when the stock was $1,200, the book value of the company was $2. $2 per share. So can you imagine paying $1,200 for a one stock that is actually only worth $2? But now you can buy the stock for, what is it, $23? And it's worth $3.53. Yeah, no, I don't like NVIDIA. Sorry. Some people like it, and more power to them. But why would I put my money, ooh, look at this, it's down to 100. 109. It was at 140. Okay, if you like NVIDIA. Okay, the high was in June. Okay, the bottom was on Monday. And we got 5 days to the upside. 1, 2, 3, 4, 5. Okay, last 30 days looks kind of like that. Okay, there's your 30-day chart. Okay, 30 days ago was the high. Last Monday was the bottom. 5 days to the upside, moving nicely if you like NVIDIA. I don't like it because the book value is horrible. The dividends are non-existent. The premiums, 108, are ridiculous. Okay? The 108, look, 108.95, the 109s are going for $3. Okay, that is just shy of 3%. Now, you cannot count on NVIDIA when it goes down. Or when does it go down? Well, it's going down right now, okay? It did go down. Now it's turning around. This is where I like to buy, right here, by the way. Here's your 30-day bottom, and now it's starting to go to the upside. Well, if you like NVIDIA. Starbucks, we already did Starbucks. Okay? Geno's, what's happening? I sold, No, not even acceptable. NVIDIA, what happened? Droken, NVIDIA. VLO. Uh-oh. Okay, Arrow. I sold my 1 share of Macy's and 1 share of Walgreens this morning. Okay, I'm hoping it's a good thing. Hope you made money off of it. I'm not quite sure. It will be wherever the stock is selling calls on. Okay, I'm sure you're talking about the cash flow on a weekly basis. Some other guy's account, S-Bucks is a no. Not continuously increasing for 20 years. Paying. Give him something legitimate. Well, thank you very much, some other guy's account. Okay, so what do I suggest? Ooh, I don't make suggestions, believe it or not. But Fonz wants to take a look at VLO. Fonz, we looked at VLO last night. VLO, because I know you were here last night. All right, first thing I always want to take a look at, the high, which was in April, the low, which was in November. Where was it? Where is it? And what direction is it currently going? Okay, great. So let's take a gander at the price, 153. Okay? The 152.50s are going for $2. All right? But I'm losing 50 cents right off the top, so I'm walking away with 150. Okay, that's just at 1%. All right? So, Valero is giving me a 1% on my trade. All right, great. A year ago, we're at 137.22, bottomed out in November at 119, topped out in April at 184. Look at where we are now. 30 days ago, here we are. Okay, 144. Your 30-day high was 2 weeks ago on a Wednesday. 2 weeks ago Wednesday. There's your 30-day high. And that was 168. So 168, she drops all the way to 142. So 168 to 142 is a $26 drop. Now, $26 drop on a $160 stock, well, that's all around 15 to 17%. That's a big drop, okay? So here's your 30-day bottom last Monday. 1, 2, 3, 4, 5 days to the upside. Well, I like 5 days to the upside. Why the hell not? Okay? If you like Valero. So let's take a look on seasonality to find out what this thing normally does this time of year. Okay, for those you don't know, this is a seasonality chart. Okay, January 1st, December 31st. The blue line represents the movement that was this year. This is this year, this blue line. The red line down here is 10 years worth of historical performance. What does that mean? Well, 2014, 2015, 2016, 2017, they take the 1 year chart from January 1st to December 31st and they pile it one on top of another for 10 years. And this here is the average movement. I want to see right here, which is the second week of August, which is where we currently are. Now, the second week of August, as you can see, it's basically flatlining. I mean, no big moves up, no big moves down. I like that for covered calls and stock spreads. Jack, Mark Sherman wants to take a Jack. I have no idea. There was even a stock called Jack. All right, so let's try it out. Jack. J-A-C-K. Jack in the Box. You've got to be kidding me. Really? It's a monthly #1. Okay? I don't do monthlies. 52.50 to 52.50s are going for 95. Cool, that's less than 2%. Okay, but that's for the month. Yeah, I don't like monthlies. They just don't work out. Too much aggravation, in my humble opinion. But look at the chart. Last 30 days. Okay, 30 days ago was the bottom at 46.50. The top was 60. She drops down. Now we're sitting at 50. Okay, here's your bottom here. Your new 30-day bottom. 1, 2. Well, today was a down day. So I'm not quite sure how you'd categorize Jack in the Box. It's something I've never even looked at. This is the first time I've ever looked at Jack in the Box. And I've been trading for 20 years. I've never even looked at this company. Never came on my radar. Okay, so let's go here. Let's put in Jack, J-A-C-K. Historical data. We want to take a look at the dividends only. And all the dividends. Okay, so they've been paying out dividends for the past 10 years. 20 cents, 30 cents, 40 cents, 44 cents. Yeah, no increase whatsoever. So for the past 10 years, they got 3 dividends. 20 cents, then it doubled. Wait a minute, it went 20 to 30, which is a 50% increase. Then it went from 30 to 40, which is a 25% increase. Then it went from 40 to 44, which is a 10% increase. So do the math, okay? 50% increase, 25% increase, 10% increase, and then a, wait. No, wait a second, that right? Never mind, whatever. Jack in the Box, if you like Jack in the Box, okay? What does this stock tell you? Well, it tells you it's going to moving up, okay? 30 days ago, it went from 49 to 61. Okay, now it's at 49. It jumped up to 55. Okay, so she's going to the upside tables and pull back. I'm not 100% sure how I feel about that, because that happened to us before on Walgreens, where we had a 30-day bottom. What we thought was a 30-day bottom. 2 days the upside, and then she pulls back and makes a new bottom. So, yeah, I probably would have gotten in on this one, because I'm not going to lie. Here's a 30-day bottom, 1 day, 2 days the upside, and then she opened up the same, if not higher. No way East Coast raised the paint, says none. No idea what the heck he says. Okay, guy over on YouTube thinks he's funny. Which are good weeklies? Oh, Drocaden, how are you? Duster, Google, yeah, no, Google doesn't share their dividends enough. Bought 100 shares of Walgreens this morning. All right, Sammy, let's take a look at WBA, Walgreens. Now, a year ago was the high at 29.41. The bottom was today. So I'm kind of curious, what made you jump in today? Because I always say never jump in. Gee, now I bought some Starbucks today. Too, got your coffee. Americano. Okay. So let's take a look at the last 30 days for Starbucks. Okay, so here's the last 30 days for Starbucks. If the 30-day bottom was here last Monday, okay, you got 1, 2 days to the upside. This one's kind of to the upside, but this was a pullback on Friday. I'm not 100% sure why you jumped in today. Now, we currently have a new bottom for Walgreens. Now, I do own some Walgreens, so this kind of concerns me. So I'm going to have to take a gander at it. Alrighty. So, what does Walgreens usually do this time of year? Usually this time of year, imagine that, look at that. Walgreens has a little bit of a downturn. See it? A little bit of a downturn this time of year for Walgreens. Now, remember, Walgreens is a little bit of a pickle because of the current administration not wanting to prosecute criminals and saying, hey, you can steal $900 worth of crap, walk on out, and we're not going to prosecute you. So where is the deterrent for stealing? Well, that comes in bred from the parents, and the parents say, don't be stealing, it's not good. Anyway, besides the point. Walgreens is going down, and it'll probably continue to go down until they see some kind of a turnaround. Now, they are getting rid of 25% of their stores. And the reason why they get rid of them, more than likely, is because they're not performing. Okay, they has 8,700 stores worldwide. The company's been in business for over 100 years. It's not going to fall off the planet anytime soon. Now, that's not a recommendation. That's just, giving you the facts. The company's over 100 years old. You have 3 opportunities to buy your prescription drugs, which is what federal government wants us all drugged out, so we can't ask questions like, where's our money going? What about the border? Shit like that. But let's move on. Okay, Mark, we just looked at Jack. What does Walmart look like this week? WMT. Wally World. Tra-la-la. Okay, Wally World's going to be a no. Only because, not saying no because it's a bad company. I'm saying no because look at the stock price. All right? Look at your bottom. Way down here in December at 50 bucks. Okay, now it's over, close to 70. Now, it looks like it should be a lot higher, but that's not a lot of movement. From 50 to 70, that's only 20 bucks. But 20 bucks on a $50 stock, that's what, 40% increase? And they get a profit taking? All right, well, let's take a gander. Now, from the way it looks to me, there should be a lot more profit taking from here to here, because that's a lot of profit, especially when December was at 50 and now it's right around 70. Last 30 days. Here you go. Last 30 days. Well, the chart is saying it's the right time to buy, because look what happened 30 days ago. We're at 70 bucks. Pulls back a little bit, 69.50, and then shoots up to 71.50. That's the high. From there, she drops, and the bottom was last Thursday. Friday was an up day. Well, actually Thursday, it's a new bottom, but it was an up day. I don't know how you want to describe that one. But yesterday, Friday, and today are both up days for Wally World. Okay, 68.70 at this moment in time. Well, that was the last traded price, 68.70. Now, if I want to buy it, I'm going to pay 69, and the 69 is going for 162. That is over 1.5%. Okay, and it's Walmart. It's not a company you've never heard of, and they've been around for a while. Okay, you want to see what dividends should look like? Let's take a look at Walmart's dividends. All right, they go way back. Okay, 1993, a penny. Oh yeah, this is not that great. From 93 to 98 was 1 penny. 99 they jumped it to 2 pennies. And then in 2002 to 3 cents. 2004, 4, and then 2005 was 5, then 6, then 7, then it's every year. 8, 9, 10, 12, 13, 16, 18, 16, 17, 18, 19, 21. Yeah, I mean, they're increasing consistently, but not every single year. Okay, not like Microsoft or Target or Bank of America or any of those companies. Intel. Oh, wait a second. Whoa. So let's go back to Walmart. Hold on a second. Okay, so what does Walmart usually do this time of year? Quickly. All right, this time of year, Walmart goes to the upside. Very slow, very slight. Okay? A very slight upward trend. Not huge, but it's good for covered calls and spreads. Okay, not so much if you want to, collect massive returns by stock jumping up in prices. No, nothing like that. But it is what it is. All right, let's move on to the next one. That was Wally World. Hey all y'all, it's Meemaw. Meemaw wants to look at Ford. Ford. Okay, we got our top right here. What is that? 1485. Now, from the 1485, take a look. Okay, here's our high way up here. Here's our bottom. 1, 2, 3, 4 days to the upside. Today was a little bit of a pullback. Not quite sure how you feel about that. Okay, what does Ford normally do this time of year? This time of year, Ford, yep, is in a down cycle. See that? You really can't miss that one. Goes to the downside, Ford. Okay, so I would wait until she gets to end of the month before she starts going up and then sideways. I used to catch too. 1974, I was a catcher for the Mets. We went undefeated that year, and we got a trophy. We deserved a trophy. Undefeated. Okay, fourth grade Little League. All right, anyway, let's go back. Back. Okay, that's Ford. What else we got? Intel. We were supposed to check Intel today. Well, let's check into Intel. INTC. Yeah. You like that one? Yeah. All right. Intel, high, low, where was it? Where is it? Blah, blah, blah. A year ago, 34.92, topped off at 51.28 in December. Hey, take a look at these last couple of weeks. Oh my goodness. Miss Lorraine, how are you there in Facebook world? Okay, here we go, right there, last 30 days. Take a look at your last 30 days of Intel. 30 days ago, we're at 34, the high's 37, drops, and the bottom was right there, 1872 on Thursday. Okay, Friday was an up day. Today was a down day. Okay, what else is going to happen with Intel? I like 2 days to the upside. So I really can't count today. So I'm still waiting for another 2 days to the upside for Intel, for me to jump in. Now, I had Intel a couple of weeks ago, but I got rid of it. Okay, I take my profits. I say thank you very much, and I'll see you again. Sammy said AbbVie. Lorraine DeCroce, how are you doing? Oh my goodness. We used to call her Rusty in high school. That is crush on her. We dated for a little bit. Anyway. All that being said, let's continue with what we're doing. You want to take a look at AbbVie, A-B-B-V, A-B-B-V. There we go. AbbVie is going to be a no for this week and this week only. The reason why I say that, AbbVie is a dividend king, which means they've increased their dividends for more than 5 decades. But look where she is. Here's the high of the year, and this is where we are right now. Now, for me, I wait for it to pull back somewhere down here in the 170 area. Okay, because that's a lot of profit taking. Now, when it drops back down, that will be a good time to take a look. And I like AbbVie so much, I'm actually going to write it down for not next week, but the week after. Because I think in 2 weeks it would be a great opportunity. And it's already written down. It was already written down last week. All right, Philip Morris. Yes, yeah, Rusty. I literally said that live in front of however many people come to see this. Which, if you think about it, I'm live on YouTube, TikTok, Instagram, and wait a minute, YouTube, Facebook, YouTube, Instagram, and YouTube. Yeah, so a lot of people know that, Rusty. I'm good. You can tell your I got stories to tell your grandkids. Anyway, besides that, let's keep moving. Tracy, you want to take a look at Philip Morris. Ooh, Philip Morris, PM. Philip Morris, another decent company. Now, I don't stand by the products of which they sell. I was never a smoker. Okay, I was married to one. It is what it is. Only one. We'll chat sometime. There's anything. We'll chat sometime. Maybe I'll come up and visit. Who knows? Anyway, Philip Morris. Take a look at where we are at the moment. Philip Morris, 116. Okay, the high was 118. It's only $2 between where we are now and the high. Yeah, I don't want to get involved in something like that because I don't like buying. It's kind of like standing on a ladder and waiting for someone to bring you a taller ladder. It just doesn't make sense to me. Or you can look at it this way. It's never seen 120 this year. So what makes us think it's going to go there? Now, if we're down here at 102 and the high of the year was up there, yeah, well, it's someplace it's been before. It's never been to 120 so far. So don't get me wrong. Philip Morris is okay, but take a look at the premiums. If I bought it at $17.91, I'd be looking at the 118s. 25 cents, yeah, I'm going to say no to that. That's not enough, to wet my whistle and get me interested. So no. Mini Split Master. Mini Split Master. I'm missing all these questions. Hey, Bubba's over here. How's it going there, Bubba? 5-year low, decent dividend, CVS. Andrea. I'm missing all these questions. Holy cow. Mini Split Master. What did you say? Hey, Bubba, what's happening? Oh, Carlo. We decide a call was a good deal. Hey, y'all, Nemo. J-Bro Flipper. Simone. Holy cow. I missed all these questions. I'm sorry, guys. Okay, we looked at Ford. We looked at Intel. Used to catch. We were supposed to check Intel. Looked at Intel. AbbVie. Philip Morris. I'm doing good. How about you? Hope everything's doing well. Everything's going wonderful. Yes, Lorraine, I get it. All right, VLO. We looked at VLO today. Mini Split Master, QDT and XDTE. Whew. All right, let's take a gander. QDTE. QDTE. No. XDTE. I could say no now. No. Okay. Now, the reason why I'm saying no to these is because I don't like monthly optional stock. You can only do it 12 times a year. And most of the time, the 12 times a year, you're not getting the price you want. Look, it's at 52 bucks. The 52 is going for 0. Between 0 and 35. Well, how am I supposed to figure out what that's going to be? And if I don't hit my target then, well, I'm going to look at next month's. And what is next month's going to be? 53, same thing. We don't know what... The numbers just don't work. I've been doing it long enough to let you know that the numbers on monthlies just don't work. Now, if I do a covered call on a monthly, I can do it 12 times a year. So let's say I get 1 or 2%. Well, great, 1 or 2%, 12 times a year is only 12 to 24%. Okay, I'm getting 1% a week using weeklies, which means I can do it every single week, every Monday. Every Monday I buy the stock, and every Monday I collect a nice premium, and every Monday, okay, I have money into my account that I can spend readily. Why would I want to jump to a monthly, which means I can only do it once per month, 12 times a year? Okay, and that only gives me what, 12 to 24% a year? That might be great for some of you. Some of you might not want to or have the desire to, manage your own money on a consistent weekly basis. Maybe you want to do it once a month. Okay, there's absolutely nothing wrong with that. Okay, but I don't. Now, I've been doing weeklies for the past 15 years, and it works nicely for me. I come from an age where a common saying for us was, if it ain't broke, don't fix it. All right, VLO, we already looked at that. Target, ooh, Target. TGT, now I like Target. Target is a dividend king. They've been around for over 100 years, and they've consistently increased their dividends for more than 5 decades. So 5 decades, let's take a look. Well, here's the high, here's the low, here's where it was, here's where it is. I want to see this area right there because that looks kind of interesting. Well, what's going on now? Well, before I do that, 137.07 is what I can buy it for. Okay, the 137s are going for 144. Now, you wanted to see a 1% trade every week? Well, here you go, right here, Target. 137, 144. That's more than 1%. Great. Now I can get, 50% or more per year, because what is this exactly? Well, the 137s are going for 144. Yeah, you take off the 7 cents, you're making 137. But you're making just 1% on this trade. Okay, fine. Simone, how are you today? Let's take a look at the charts. A year ago, 121.91, that's where we were. That stuff is horrible. It's It's a hot toddy. Tea, lemon, honey, and was it bourbon or whiskey? Makes the cough go away though. All right, let's keep on moving. Flipper. Don't want to touch on Mara with a 10-foot pole. Now, Flipper, let's take a look at Mara just to see what you're afraid of. M-A-R-A. Now, I do own some Mara. Okay, high over there, low, where it was, where it is. This is what's going on right here, right now. Right here, right now. Let's take a gander at that. 30 days ago, or 19, topped off at 27.30. Now that was 3 weeks ago. 1, 2, 3, 4 weeks ago. Okay, so the high was 4 weeks ago. The bottom was here on Monday. She jumps up Tuesday, Wednesday, Thursday, Friday, and today she gaps down and she's sitting at 15.11. What do I like about gap down? They have a tendency to fill. And, well, here's the bottom here. Okay, how low is she going to go before she turns around and goes back up again? Because that's all stocks do. They go down and they go up. They go down and they go up. So if I was going to buy it at 15.24, I would probably do the 15.50s and look at the premium I would collect. 53 cents a share. But here's the thing. You really got to like Marathon. Okay? Marathon. M-A-R-A. It's currently at 15.24. Now, I wouldn't suggest you getting it unless you actually like the company. So remember the 5 rules. Number 1, never buy something you do not understand. Buy it as if you're going to buy it and hold on to it for a long time. If you hit your target within a week, 2 weeks, 3 weeks, fine, great. Take the profit, say thank you very much. Okay, but go into it as if you were going to buy it and hold on to it for a long period of time. So, that being said, the 15.50s are going for 53. That is a nice premium. What is it exactly? Let's clear that. And look at the 53. And we're going to divide that by 15.24. But that's 4.37%. That's not it. Because if the stock goes above the 15.50, all right, we're also going to collect an additional 26 cents a share. The difference between the purchase price, 15.24, and the strike price of 15.50. Well, that sounds great. But then ask yourself, again, do I like Marathon? Do you see it staying here, or do you see it going back to the upside? Well, that's all stocks do. They go up, they go down, they go up, they go down. But you have to decide which one's right for you. Hey y'all, Meemaw, how did you decide which call is a good deal? Carlo, why not trade stocks over $250? Okay, now I'm not telling people not to buy stocks over $250. What I'm saying is, it's not in my price range. Okay. Now I do cut some slack once in a while if it's like Home Depot or Lowe's, but some of the stocks I can't do $750. I can't do $1,200. That's me personally. Okay, if you can afford 1,000 shares at $250, hey, more power to you. I can't. So I like to keep my stocks under $250. It's got nothing to do with valuations or anything. Millijuice, interesting. Do you deal in short-term investments or long-term? If the latter, how do you feel about EXAS? EXAS. Well, I can tell you with almost 100% certainty, I've never heard of the company. Okay? And it's a monthly. So I don't do monthlies. Exact Science Corporations. Interesting. No, not saying there's anything good or bad about it. It's just saying I've never heard of it. Okay? I've never heard of it, and it's a monthly optional stock, which means I don't do monthly optional stocks because they just don't pay the amount of money that I'm looking for. I'm looking for a safe, predictable, consistent 1% per week. So EXAS does not fit that. Aceres. Since Apple's EX dividend was today, I can sell it now, right? I'm up a few percent. Now, I really can't tell you yes or no whether you should sell it or whether you should keep it. But I can say a couple of things. Number one, it's not a profit until you take it. That's number one. Number two, nobody ever went broke taking profits. And number three, well, Apple's going to have a dividend again in another 90 days. So you got to decide what is right for you. Now, Apple is on my list. I just didn't buy it this week. Andrea, let's look at CVS. CVS. Now, CVS is kind of like in the same situation with Walgreens. Okay, it also is a 100-year-old company. It also is in every major city in the United States, and it also is one of the few places in which we can get our prescription drugs. Walmart, Walgreens, CVS. Those are the big three. Okay, they're all in almost every major city and town in the United States. You really can't get away from them. So is it a good deal? Well, let's take a look. At this moment in time, CVS is at $55.88. So the 56s are going for 76 cents, which is 1.5%. So if you get 1.5% per week, well, that's like 75% for the year. Well, that's nice. Well, you doubling your money every 15, 16 months. Well, that's cool. All right. So high, low, where it was, is, and it's at 55, it's at 81. So let's take a quick look. Last year, 74. Top was in the beginning of January at 83.12. Bottomed out in May 24th. And that was 52, is that right? 52.77. All right, last 30 days. There you go. And that's pretty plain and clear to see. Check it out. 30 days ago, 58, shoots up to 62, pulls back to 57.5, shoots up to 64, drops down to 55.50. Okay, well, that's not the 30-day bottom. Because what about tomorrow? Tomorrow it could be a little lower or it could be a little higher. We just don't know. Uh-oh, I'm trying to, no, don't want that. Huh. Okay, I'm not quite sure why it says that. All right, anyway, so let's keep on rolling. If you like CVS, of course. Okay, I would personally be looking for a 30-day bottom, which I'm going to write that down for next week because we want to find the bottom there. CVS. All right. That, we'll take a gander at that next week, because more than likely, if she bottoms out tomorrow, right, that's Tuesday. 2 days the upside, that's Wednesday and Thursday. Okay, all my money's gone by Friday, so I got to wait until Monday anyway. Next on the list, Andrea, 5-year low and a decent dividend. Well, Andrea, you're 100% correct. However, Andrea, this is just I'm not telling you what to do. Okay? Seriously, I'm not telling you what to do. But if it was me, here's your 30-day top right over there. Okay? 30-day top. It's right now at the 30-day bottom. I would wait. Me, personally, I would wait until it is solidified that it is the bottom. It could be today, but how can you tell? I like 2 days to the upside before it gives me confirmation of a 30-day bottom. That being said, well, tomorrow or the next day will give you a better idea of what is low and of the low of the day and of the low of the week and whatnot. Okay? That being said, let's move along. Carlo, why not trade any stock if it's covered and make the 1% weekly goal? Ooh, Carlo, that's a great question. Okay, why not trade just one stock, any stock, if it's covered and it makes 1% a week? Okay, great question. Okay, here's the thing. Now, there's 9,598 companies that I can invest in on any day, right? We looked yesterday to see how many stocks are available. 9,598. Great. How you decide which ones? Well, for me, particular, I want the cream of the crop. I want companies that have longevity, that have consistently made money, and it's verifiable. Okay? So, what I am looking for is companies that share the profits. I'm not looking for capital appreciation because they take their money and the stock just keeps on going up. Okay, fine. Well, how do I know if they're profitable? Well, I got to read all the reports. And I'm not big on that. There's a shortcut. Shortcut is companies that share their profits, also known as a dividend. That is the portion of the profits that goes to the shareholders. Now, when we buy and sell stocks, we are the shareholders. That being said, I want to make sure any and every company I invest in is continuously profitable, which means higher and higher and higher dividends. Great. Well, where's the cutoff? Me, I like 20 years. Well, at 20 years, okay, what do you got? You know, most companies can't make it past 3 to 5 years. That's a fact. Most new companies can't make it past 3 to 5 years. Okay? And it's like 1 in 100 or 1 in 1,000 that make it to 10 years. Well, how many is it getting from 10 years to 20 years? Let alone 20 years of increased dividends, which means if they're increasing their dividends, they're consistently profitable. Okay, so if I'm paying out, so if you lend me money and I give you the exact same money back every single year, well, I'm not really increasing any, am I? But if I give you more and more money every single year, well, that means I'm more and more profitable year after year after year. Okay, higher and higher and higher profits. That's what I'm looking for. What you guys plan on doing with your time and your money, that's perfectly fine by me. And you do what you want. You do what you think is right. But ask yourself a question. If I was going to invest my hard-earned money, what company do I want to invest it in? A company that's not continuously profitable year after year, or one that is verifiably profitable year after year after year? Now, you can find this information out. You can go and look at scanners and find out, well, what am I looking for? You can go and look at the fundamentals. Okay, the fundamentals, well, that tells you what is the profit margin? How consistently are they profitable? What is the profits year to date? What is the balance sheet look like? How much cash flow do they have coming in? How much cash flow do they have going out? What are the expense ratios? There's a lot of information to decipher through to figure out whether or not a company's consistently profitable. Or you can say, the hell with all that crap. How often do they increase their dividends or the profit share to the investors? And if they do it every single year, those are the companies I want. Plain and simple. Okay, also, this might be a little neat. I probably should have led with this. Probably should have led with this little tidbit. Okay, each little dot here represents a company that I like, that I've already looked into. Johnson & Johnson, KeyBank, Aflac, Archer Daniels, Target, Walgreens, blah, blah, blah. A whole bunch of companies. Ooh, thank you. Oh, what was that? All right, so if every single one of these companies that increase their dividends every single year, each one of these represents an EX date, which is the last day the stock trades before the dividend is paid out. Now, if I want to collect the dividend for Johnson & Johnson, I have to buy it a day or 2 or 3 or 7 or 12. I have to buy it before the EX date to qualify for that dividend. Great. Well, a lot of people already know that information. Okay, you have to own the stock in order to collect the dividend. Well, great. Now, if that's the case, hi Lorraine. Okay, if that's the case, I want to buy it before the EX date because stocks have a tendency to go up in value before the EX date, before the dividend is paid. So if each one of these stocks go up before the dividend date, okay, here's the 30th. Well, I want to buy it 10 days before. Well, that's the 12th. ADM, Aflac, Target, well, I want to buy those on the 5th. Kroger, Exxon, Emerson, Hershey. Well, I want to buy those on the 29th because I want to give it 2 weeks to go up in value before the dividend. That way, if it goes up in value before the dividend, I can jump in, get my 1% profit for the week, jump out, and then jump into another company. Because listen to some of these. Citigroup, Ford, Intel, British Petroleum, IBM, Siri, Visa, Wells Fargo. That's this week here. Okay, the next week, Apple, Capital One Finance, PPG, U.S. Steel, Clorox, Kroger, ExxonMobil, Emerson, Hershey's, Walmart. That's this week here. And then the next week, CVX is Chevron, UPS, Archer Daniels, Aflac, Target, Walgreens, blah, blah, blah. And it's every single week I have good quality companies that consistently increase their dividends. So if I know when the stock is going up 2 weeks before the dividend date, that tells me when to buy. Now, the only stocks I look at have consistently increased their dividends for more than 20 consecutive years. Who are they? Well, the Dividend Kings. 50 years of increased dividends every single year, higher and higher and higher for over 5 decades. Okay? Then you have the Dividend Aristocrats and the Dividend Champions. Okay, Dividend Aristocrats, I believe there's 64 of those companies have increased for 25 years or more. Dividend Champions, 150 companies that have increased for more than 25 consecutive years. The rules are a little different between the contenders and the, from the champions and the aristocrats. Now, they both have 25 years of increased dividends, but the aristocrats are a little bit more picky on who they choose to be partners with. Now, you have the dividend contenders, 300 companies that have increased their dividends for 10 years to 24 years. Not quite to that next phase. The next phase is either dividend champion or dividend aristocrat. Now, the top of the line is the Dividend Kings. And that's 5 decades of increased dividends. So why don't you have those in your roster? 300 companies that have consistently increased for 20 years or more. So if I buy the company and it drops, I'm still getting the exact same dividend. Because if we look, CVS, let's look at ExxonMobil. XOM. Okay, here's ExxonMobil. Now, just a rough idea, just a little example. We know that the dividend for ExxonMobil is 95 cents. Okay, so let's say hypothetically we buy 1,000 shares. 1,000 shares at 95 cents each is $950. ExxonMobil pays every 90 days, once per quarter. Okay, so go all the way back here. Let's say, hypothetically speaking, I buy ExxonMobil at $120 per share. If I buy it at $120 per share, what dividend am I collecting? Well, I'm collecting 95 cents a share. Okay, I got 1,000 shares at $120. Well, I'm getting $950. Well, 3 months later, we're down to $100 a share. Okay, I just lost, on paper, $20 a share. But how many dividends am I collecting? Well, if the stock is now worth $100 a share, if I bought it at $120, okay, well, at $100 a share, I'm still collecting the 95 cents a share. I'm still collecting $950. Well, let's look at it one more time. Okay, so 3 months later, now it's at $124 a share. Well, what am I collecting in dividends? 95 cents. So regardless of whether I buy it here, I'm still getting 95 cents a share. So when the stock is coming down, I'm still collecting 95 cents a share. When the stock is going up, I'm still collecting 95 cents a share. Now, if the stock doesn't pay a dividend, what am I collecting? Absolutely nothing. Well, what would be the point? Okay, if you can't tell. Now, if there's no dividend, how can you tell when a stock is going to go up or not? See, this here, this calendar tells me when is the stock going to go up in value. Well, it usually goes up in value just before the EX date. So Johnson & Johnson and Key Bank, right here on the 27th, If I buy it on the 12th, I got 1 week, 2 weeks, 3 weeks to hit my target. So I can get a premium here, premium here, premium here, and the dividend there. Great, well, I just tripled my income. Well, what I have coming in. Why buy a stock and just collect the dividend when you get a premium, 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 dividend, premium, get whatever, as long as you hit your target. Alrighty, next. Carlo, I hope that answered the question. All right, thoughts on curl and load. Poppy Peahens. Poppy Peahens. All right, anyway. K-U-R-L. I could say no now, or you can have me pull it up and then say no. K-U-R-L. We cannot find this symbol. Well, that's a no then. L-O-D-E. That's a no because it's a monthly. Andre, we already looked at CVS. Curtin Coy, how are you? Is it stupid to buy one stock a day? No, not really. You know, it would be a wise idea to buy them, wait until Friday and buy 5 of them on Friday rather than one Monday, one Tuesday, one Wednesday, one Thursday. And the reason being, every time you buy, you have to pay a commission. So if you buy one a day on Friday, you have 5 shares and you paid 5 commissions. Or you can just wait, buy 5 of them on Friday and pay 1 commission. Or you can wait and buy all 20 of them once a month and pay just 1 commission. So it really depends on the numbers, how many times you're going to be doing it. Millie Juice, generally not if you're buying it low, blah, 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 blah. General Choi, I'm doing it for dividends. And yes, cheap. Okay, I'm going to agree with you. Alrighty. Uh-oh, I got to plug my phone in. Because last time my phone wasn't plugged in, it died, and we ended early. So let's plug the phone in. And there we have it. We're plugged in. Each day by the lowest. Okay. Please don't ask for Mara. Hasnapfeffer, how are you doing today? Unfortunately, many 100-year-old companies go out of business. Okay. I'm sure they do. But if I'm looking at 100-year-old companies that are consistently profitable and consistently increasing their dividends, why would I not want to buy them? Jesse wants to look at Nike, N-K-E, Nike. All right, just to let you know, I do own some Nike. Okay, first thing I want to see, here's the high, here's the low, here's where it was, here's where it is, and here's the direction it is going at the moment. It is 74.63. See the price, 74.63. The closest strike price is going to be 75. The 75 is paying out 75 cents. That's 1%. If you like Nike, let's take a look. A year ago, Nike was sitting at 107. Jumped up to 123 the end of December. Okay, look at the last few months. Last 30 days. Now, well, it might be a good time for me to get rid of my Nike. Might be. All right, check it out. 30 days ago, 73.50. She drops, goes up. Drops, goes up, hits our 30-day high. Okay, 30-day high is right there. 30-day high would be 75.43. 3 days later, look at that, 3 days later is our 30-day bottom, which was the 5th, which was last Monday. Another 30-day bottom on Monday. And look what we got. 1, 2, 3, 4, 5 days to the upside. Well, cool. Look where it's getting. It's getting to challenge the 30-day high at 75.50. Okay, what's going to happen then? Well, it could And 1, 2, 3, 4, 5, 5 days the upside, it could at any time, any moment, turn around and be profit taking, because at your bottom 70, 70, 75. Now she's at 74. That is a $4 increase. Well, $4, yeah, by a $4 increase. And $4 increase on a $70 stock. Oh, it's a little over 5% maybe. Where is he reading the comments? Well, Poppy Poop Hands, Poppy Pea Hands, is that it? Well, I'm getting questions. Okay, just to let you know, the questions I'm getting are on Facebook, Instagram, YouTube, and TikTok. So I got a lot of questions coming in from different angles. And I'm reading the one. And I got 96 questions. Millie Juice, yes, I am reading them here. CVS, looked at that one. Chevrolet, how are you today? Calvin. Yep, CVS is going to be closing. Thoughts on XRP? XRP is cryptocurrency. I don't do cryptocurrency. Walmart cut their dividend, and they did a dividend buyback. Cool beans. Walmart school starts. HRTG. Okay, HRTG. HRTG. Yeah, that's a no. Sorry. ASIX. ASIX. That's a no. See, when I say weekly options, you guys keep feeding me this monthly option stuff. And when I tell you I don't do monthly options, yet you still send me companies that have monthly options, when I say the numbers just don't work, you send them to me anyway, and it boggles my mind why you guys do that. F-350 deadly vehicle is if in a crash. Okay. CVS, we're going to look at CVS. Where's the dude reading the comments from? Okay. And I'm going to do this. I'm reading them right from here. It just takes a while to get through all the questions. There you go. I sent it to him directly. Okay. How about Disney? Ooh. What's my top holdings? I would have to say Macy's, AO, and Wynn at the moment. Disney. Okay, DIS. DIS. Now, I like Disney. We took a look at it yesterday. Here's the high of the year, the low of the year. Here's where it was. Here's where it is. And the direction is going to the downside. But let's take a closer look. Right now, Disney is at 85 and 95. We'd be looking at the 86s. And the 86s are going for over a buck. Now, over a buck, that's over 1%. Great. I love 1%. 1% is nice. Now, Disney bottomed out at 78.92, and that was back in October. Got a triple top at 123, and that was the end of March. Okay. Well, look what's happened lately. Okay, here's where we are lately. Check it out, last 30 days. 30 days ago, we're at 97. She jumped up to 98.50, drops down, pulls back, and then here our 30-day bottom was last Thursday. So Friday was an update. Today, not an update. So this is not the 30-day bottom yet. Because I like 2 days to the upside to isolate the 30-day bottom, more or less to introduce you. Like, hello, here's my 30-day bottom. But I like 2 days to the upside. So I might be waiting a little bit longer. And Disney is paying over 1%. And I do like Disney. What does Disney normally do this time of year? Well, normally this time of year, this is what Disney does. You can't mistake that. That's going to the downside this time of year. What is the chart telling us? See? Chart's telling us she's going down. See, look at it from there. Going to the downside, but we're waiting to find a 30-day bottom for it to change direction and start going back up, because there's going to be a point with every stock where there is an absolute bottom somewhere, and then from the bottom it goes back to the upside after it finds the bottom. That being said, let's move on. What do you do for a living? I'm retired. I don't do anything. What about Disney? We just looked at Disney. Howdy, James. Howdy. Thoughts on MAXN. Never heard of it. MAXN. Okay, try it one more time. MAXN. Maxion Solar. I'm going to say no, because for some strange reason, even though it's at the low of a year, I find it very difficult to believe a company that is at 14 cents per share actually has paid dividends for 20 consecutive years. Michael, Altria, what do you think about their dividends? Well, let's take a look. We looked at Altria last night. Oh, wait a minute, we looked at it this morning. Okay? And it's going to be a no only because look where it is. Okay, 30-day high. Actually, it's the high of the year, and this is where it is now. All right? And the 50 is going for 45 cents. Yeah, the numbers just aren't working this week. Sorry. No. TFM. Is that Taiwan something? No. TFM. Yeah, it has no options. Sorry. Thanks for sharing your experience. Thank you. What about Disney? We already looked at Disney. No more commissions. Got it. Dividend Stock. We already looked at that one. Thoughts on Disney? I already did that one. We already did MXAN. What do I do for a living? You asked me that 3 times. What about Disney? You already did Disney. Disney. Wow, you guys asking the same questions. Wendy's. We already looked at Wendy's. Can you explain option trading? Is that here your premium is? I'm going to assume where. Option trading. Well, option trading can be very simple, and it also can be very complicated. All right? Now, the trading strategy I teach here is called a covered call. It is one of the safest trading strategies there is. What you're doing is you're buying a stock at a certain price. Okay, whatever the price is. At this moment in time, we're looking at AT&T, and the stock price is $19.45. That's the current stock price, $19.45. So, where the option comes into this situation, if I buy it at $19.45, I can sell somebody the right, not the obligation, because there's a difference. A call option has rights, put options have obligations. And I don't like using put options in this broadcast because they can be confusing and misleading. So I only go over the covered calls, which are the call stock options, which gives you the right, not the obligation, to buy the stock at a certain price by a certain date. Now, the dates that I'm using are weeklies. 16 August 24, that's this Friday. 23 August 24, that's next Friday. 30 August 24, that's 3 Fridays away. 6 September, that's 4 Fridays away, 5 Fridays away, 6 Fridays away, so on and so forth, every single Friday. That's what's called a weekly option. Now, if I buy it tomorrow morning at 1945, sell the rights at 1950, I'm going to collect 14 cents a share. Well, that's going to be a no for me because that's not quite 1%. I like a 1% return on a weekly basis. 1% return on a weekly basis is over 50% per year. Now, 50% per year is very doable for me. I can be very comfortable living on 50% of my little nest egg. My little nest egg ain't that big, but it's big enough for me. You know, it allows me to do whatever I want, whenever I want, blah, 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 all that kind of nice, neat, fun stuff. Now, that's horrible stuff. Ugh. So MAXN is a no, and hopefully that explains it, the premiums. Daddy Happy, Realty, yeah, that's a no. If you take a look, seriously, take a good look at the numbers for O. What are you paying for? What are you getting? What are your limitations? What is your growth potential? What is the consistency with their profits? And how much money can you realistically make from O on a yearly basis? Yeah, O's a no for me. Can we practice on Think or Swim? What is the best entry price? There is no such thing as the best entry price. Mini split. Uh-oh, I missed that. I'm new at investing and I apologize. Not a problem. All right. I am reading. Takes me a while to get to all the questions. Yep. It's not me. Can you please show us how to get the calendar to show us companies paying dividends? All right, it's not me. Are you ready? If you are on Think or Swim, it's really not that difficult. Okay. Wow. Okay. When you log in to Think or Swim, this is usually what you're going to see. All right. Now, first thing I want to do, see way up on top, gives you all those numbers up there. First thing I want to do is click on Market Watch. And now on the Market Watch, just one line underneath it, it says quotes, alerts, visualize, finance rates, calendar. All right. Carlo, it's not me. You research the stocks on Google. Okay. Poseidon's last molar, dude. How you doing? Ooh, Taito EL, AGNC. All right, AGNC. AGNC. High, low, where was it? Where is it? What direction is it going? What can I buy it for? $9.98. The 10s are going for 7 cents. Nope, not quite 1%. Now, I like AGNC, just not this week, okay? Because it's not paying 1%. All right, it's only paying 0.7, which is 0.75%. Now I understand 0.75% per week is about 60% per year. Okay, if you like that, why not? Hertz, Jim Clifford, Hertz, H-E-R-T. There's so many Hertz. Okay, take a look. Hertz Global Holdings, Hertz Energy, Hertz Ford International. Okay, HGZ. Okay, Hertz Global. $3.38. It has weekly options. Interesting. HTZ. HTZ. There are no dividends for the time period selected. No to Hertz. Sorry, Jim. Now, Jim, the reason why I like dividends because it shows me the company is profitable and they're willing to share their profits. Think of it long and hard. If you're going to invest your money into a company, do you want a portion of their profits or do you want them to do their business and let the company grow? Now, that's called capital appreciation. If you're looking for capital appreciation, you're in the wrong place. I'm not in a position in my life where I have the desire. I might not even have the time frame. Would put all my money into a company and wait for it to grow? Yeah. Sorry, I need cash flow. I need an income consistently. The easiest way I can do it, buy a decent company, sell the rights to somebody else, collect that 1% on a weekly basis. That gives me 50%. Okay, how about Pfizer? Ooh, Jeremy, Pfizer. Ooh, I like Pfizer. PFE. Pfizer. Well, first thing I want to see, High, low, where was it, where is it, what direction is going? It's actually going in a downturn at this moment, but here's the thing. 28.47, okay? 28.47 to 28.50s, which is the closest strike price, is paying 31. 31 is over 1% for the week. So if I buy it first thing in the morning, sell somebody the rights at the current market price, I can get my 1%. But here's the thing. Look at the last 30 days. Okay? 30 days ago, we have our previous 30-day bottom at 28.42. Okay? 38 previous bottom, 28.32. 3 weeks later, we have our 30-day high, 31.54. So from 28 to 31, that is $3. That is a 10% move, or somewhere in that area. So from the 31.54, she drops, and today is the new 30-day bottom at 28.32. Okay, so again, we are looking for a 30-day bottom, and then we're looking for 2 days to the upside as she turns around and starts going back up. Well, when is that going to be? Well, we don't know. It wasn't today, but it might be tomorrow or the next day. So I am going to write Pfizer. I think it's already written down for next week. Yep, it's already written down for next week. So we are keeping our eye on it for the new 30-day bottom. Once we find that 30-day bottom, that's a good time to jump in. Because you're going to make your money most of the time when you buy low and then you sell high. Well, with Pfizer, it's at the 30-day bottom now. It's not going to get any lower than the 30-day bottom. But you got to wait to find out where the 30-day bottom is. Because if you buy it tomorrow, she might keep going down. She might turn on Wednesday. She might turn on Thursday. She might turn on Friday. She might turn next week. But as long as we keep our eye on it. Now, I like Pfizer. I get no problem whatsoever buying Pfizer because Pfizer is on my list. Okay, I'm just waiting for the bottom. I'm also waiting for when the dividend shows up. Okay, Brian wants to take a look at AAP, Advanced Auto Parts. Now, just to let you know, I do have some Advanced Auto Parts. Again, always, 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 high, low, was, is, direction. And then we move on to the price. What am I paying for it at this moment in time? I'm paying $59 per share. $59 per share is $1.06. That's just a smidge below 2%. For the week, what does the stock need to do? Well, the stock needs to stay at 59 or higher. Right now, it's at 58.06. So I'd probably go with the 58s. Is that right? Yeah, the 58 only gives me 1% though. But I don't have to wait for the stock to move. Okay, there's a lot of interesting things about that because at the current price at the moment, 59, okay, because the bid is 58.10 and the ask is 59. That's a big spread. In the morning, these numbers are going to change, but the math doesn't change. This is my purchase price. These are the strike prices, and these are the premiums for the strike prices. So at 59, 59, 106, 106 is more than 1%. It's very close to 2%. But the stock has to be above 59 by Friday. If not, I hold on to it and I do it again next week to see if it goes above 59 next week. Well, last 30 days, okay, look at this, look at what it's done. Up, 30-day high, down, up, down, 30-day bottom, up, now she's coming back down again. What does that tell you? Well, hypothetically speaking, she should be going to the upside because your 30-day high is up there. What is this and what is that? More questions. Dennis, how's it going there, Mr. Dennis? Brian, you want to take a look at Merck, huh? Give me 1 second. All right. All right, we'll take a look at Merck. Glad you're doing good there, Mr. Dennis. Way to go. MRK. Merck and Company. High, low, where was it? Where is it? What direction is it going? What am I paying for it? 114.61. Well, the 114s are going for 94. That doesn't quite work for me. Sorry, don't get me wrong. Do you ever come home? Yes, I do. Next time I'm up, I'll give you a call. Maybe we'll do lunch. That would be fun. Anyway, why do you always choose in the money and take an instant loss? Why not just do one step ahead? Wow. I'm not quite sure I'm going to agree with that statement. Only because, as I recall, hold that thought. Okay. Year-to-date profit and losses. Over here. Wynn Resorts, AEO, and Kohl's. But you really can't count those as losses because I still own them. All right? So, below that, there's two. Able model and Bitto. Okay, we were experimenting with Bitto, didn't go the way I wanted to do in Able model. Those are the only two losses. So I'm not quite sure what you're talking about because everything else, see, everything else for the rest of the year has been profits. Okay, so I've only lost on 2 trades this year. So I'm not quite sure what you're talking about when you say, why do you always choose one in the money and take an instant loss? I don't take an instant loss. Okay? If I'm buying it at 1.4, well, this one's not working. So let's go back to one that does work. Let's go to Macy's. It always seems to work for me. All right. So if the current stock price is $15.82 and I'm selling the 15.50s, I'm collecting 52 cents, but I'm losing 32 right off the top, right? Because 15.82 to 15.50, 32-cent loss. So I take the 32 cents off of this, I'm walking away with 20 cents. Okay. So that is one strike in the money, the 15.50s. How can you possibly say I'm losing money? Because I'm not. If I'm buying it at 15.82, selling the 15.50s, collecting 52 cents, I'm still 20 cents to the positive side. Lucky Larry, good evening. How are you doing? So if I'm still 20 cents in the positive on a $15 stock, well, that's over 1%. That's what I'm shooting for. So I'm not quite sure where it is you think that I'm losing money and what is a better play. Because the way I look at it, if I buy for 15.82, sell the 15.50s, what does the stock have to do? Absolutely nothing. If it goes up, fine, I make my money. If it stays the exact same, fine, I make my money. The stock can even come down and I'll still make my money. Let me show you. Okay, now, Macy's, we all agreed that I like the 15.50s. Okay, so we're going to change this, get rid of this. We're going to change this to covered call. And we're going to do the 15.50s. All right, so I'm going to buy the 15.50s. It's already preset. Here it is. I'm going to buy 1,000 shares of Macy's at the market price. I am going to sell 10 contracts of Macy's 15.50, the call option, the limit order for the day. So let's see what the order looks like. Here's the order right here. Buy 10 covered calls M, which is Macy's. 100, which are the weeklies. 16 August 24, that is this coming Friday. Uh, the 1550, remember we already said we like the 1550 because right now the stock is at 1582, right? And this is a limit order to open to open. Now it says to open because it's two separate orders. It's one trade, but two orders. I'm buying the stock, okay, 1,000 shares of Macy's. It's buying stock, that's opening one position. The second position is I'm selling 10 contracts or 10 covered calls against the positions I just bought. That's opening the second position. Now, next line, break even stock price, 1526. You see that? 1526. So currently it's at 1582. So if I buy it and I sell it, the break even is 1526. So if the stock goes up, I make my money. Stock stays the exact same, doesn't move at all, I make my money. The stock can even go down a little bit, all the way down to 1526. Because at 1526, that's my break even. 1525, that's where I start losing money. Okay, well, I don't, no intention on selling less than what I paid for it. But we're not done, let's continue. The maximum profit for this trade is $240. So let's get the calculator out. Clear this. $240 is the maximum profit that I can make. Okay, maximum profit. Cost of trade, $15,266. Okay, $15,266 comes to a grand total of 1.57%. That's 1.5% for the week for 4 days: Tuesday, Wednesday, Thursday, Friday. Because remember, the option expires on Friday. So you're saying I'm losing money, and I'm saying I really don't know what you're talking about. Wells Fargo is better Tuesday than it was today. All right, Dennis, we'll take a look at Wells Fargo. WFC. So when you say I'm losing money by doing that trade, you're looking for something different than what I'm looking for. I'm looking for safe and predictable. My break even is 1526. The current price is 1582. So let's get out of all this stuff. Let's go back to the chart and see where we currently are. Okay, 30 days ago, here's our 30-day high, 1950. She gaps down. Now, if you don't know very much about stocks, gaps have a tendency to fill. All right, I'll give you another point. There was a gap here on the second and a gap here on the fourth. All right, gap and a gap. Well, this one already filled. Here's your 30-day bottom. 30-day top, 30-day bottom, 1, 2, 3, 4, 5 days to the upside. Look how much space between where she is now and the previous 30-day high, way up here. So you're in an uptrend, number one, making more than 1%, number two, more than a 100-year-old company, number three, name recognition like you can't even buy name recognition like that. Okay, Macy's. Okay, it's giving me more than 1%. I already did all that. It's a weekly up, all that kind of nice, neat, fun stuff. I like Macy's. All the numbers work. What does the stock have to do? Absolute nothing. Goes up, makes my money. Stays the exact same, does nothing, still make my money. Okay? Go down a little bit, I'm still making the money I'm making. Rule number one, never buy something you do not want to hold long term. Always go in as if you're going to buy it and hold it for the long term. Plain and simple. Never buy something you do not understand. Rule number two, never sell at a loss. What about dividends if the stock gets called? We call that collateral damage. How's that? Uh-oh, I missed all these questions. All right, Poseidon's last mola. O is recommended for balance and diversity. I don't get it. Well, I don't get it either. And over my dead body would I ever buy that piece of crap. But that's just my opinion. Why do I say that? Well, let's take a gander, because this is the third time someone's asked me about it today. Number one, it's too close to the high of the year. Yeah, no thanks. I don't do the thing. Do you know what the thing is? Where you buy it high and wait for it to get higher. Yeah, no, I don't do that. All right, it doesn't make any sense. You don't make money in the stock market buying it high and waiting for it to get higher. No, you make money in the stock market buying it low and selling it high. Okay, that's number one. Number two, it's a monthly optionable stock, which means I can only do it once a month, 12 times a year. It means I'm only getting 12 checks from this turd. Okay? Third, let's go to third. All the way over to Yahoo Finance, where we put it in here. Number one, let's look at the summary. What is O offering you? Well, check it out. 5.2%. So you're going to put your money into a company. They're going to give you monthly payouts to make you feel good about the 5% that you're getting. I could put it into government bonds and get 5%. All right, let's take a look, because it gets worse. All right, we're going to take a look at the dividends and how often they increase. Okay, now, Realty goes all the way back, quite a ways. Wow, quite a ways. All right, here we go. All the way back until 1984. So Realty has been paying out dividends quite a lot. Now, in 1994, it was at 7 cents. 95, 7 cents. And she went to 8 cents. And from 95 to 96, 8 cents. 95 to 99. So 4 years, no increase. 99, 9 cents. To 23, another 4 years, no increase. Okay, so it was at 8 cents for 4 years. It was at 9 cents for 4 years. 2003, she goes to 10 cents. 2004 is at 11. 5, it's still at 11. 6, it's still at 11. Then she goes up to 12 cents. In 2007, it's at 13. 2008, it's at 14. And it stays at 14. From 2008 to 2012, no increases. 2012, it's at 15. Then she goes to 18 in 2013. Okay, for 2 years she stays at 18. In 2015, she's at 19. 16, she's at 20. 17, she's at 21. 18, she's at 19. 2 years. Okay, see, they don't increase their dividends consistently. All right? Like every 4 years, they increase their dividends. So think about it. You're investing your money into a company that pays a 5% yield. That means for every $1,000 you put in, they're giving you $50. Why? Why would you do that? All right? So here's the thing. It's a monthly, number one. It's at its high, that's number two. The dividends are not consistently increasing. Every 4 years they increase their dividends. That doesn't make any sense to me. Number five, what was number four? They're paying 5% yield. Yeah, so no, I just don't like There's too many other companies that offer a better dividend and a better consistency of increased dividends. All right, Dennis has been waiting for a while to take a look at Wells Fargo. So let's take a look at Wells Fargo. Now, I don't own any Wells Fargo, so I can't really say anything. WFC. All right. Wells Fargo, first thing, as always, the high, the low, where was it, where is it going? Oh my goodness. Currently it is at, let's move this over so we can read it better. It is at 52.35. 52.35, and it's not quite making the numbers that we want. Oh. Jonathan Oakley, how are you doing, Mr. Jonathan? Glad things are going good for you. All right, Wells Fargo, current price, 52.35 to 52.50s are going for 49 cents, not quite 1%. But if it does hit 52.50, you get the difference between the purchase price and the strike price. That will bring you up over 1% if you like it. All right? Now, let's take a look at the charts. What does that tell us? Well, a year ago at 47.55, we bottomed out at 38.44, and that was back in October. Okay, topped out at 62.50, and that was in the middle of May. From there, just kind of sideways, and look what happened for the last 30 days. Our 30-day high is over here, the middle of July, and that's 61. Sideways for a little bit, one gap down, two gap downs with this gap. Okay, here's our 30-day bottom at 50 bucks. So 61 to 50, that's an $11 drop. $11 drop on a $50 stock, that's 20%. So here's where we are, 52.06. So if I buy it and get my 1%, she's going to be in an upward trend, hypothetically speaking, if you like Wells Fargo. They've been in business for over 100 years. I really don't think they're going anywhere. Okay, that being said, what are we looking at now? All right, Happy Daddy, we already looked at Altria. It's not me. Is the calendar available on the mobile app? I honestly don't know. I don't use the mobile app. Panko breadcrumbs. I just bought Riley today for $8.03. Do you think that was a smart idea? I know they do pay dividends. Panko breadcrumbs. I'm not going to make you feel bad about what you bought. If you thought that was good deal, fine. But let's take a look at Riley, and I'll explain to you why I wouldn't buy Riley. R-L-Y. Okay. Well, it was kind of smart buying it at the drop. If this is the bottom, because you don't know, she could drop lower. Okay. I don't know why you didn't wait for it to turn. But anyway, let's continue. First thing, as always, the high way up here, 52. Okay. And she drops all the way down to the bottom at 15 before she makes the big gap down today. That's a big gap down. Nice thing about gap downs with certain stocks is it's going to fill eventually. Go back to the upside. But let's take a look at the numbers for Riley. Right now, at 8.09, the $8 is going for 70 cents. That cannot be right. If it is, what is that? So let's take our calculator. 70 cents. All right, we got to subtract 9 cents off of that because we're losing 9 cents right off the top. So it would be 61. 61 cents divided by 8, because that's the purchase price. That's a 7.5% return for the week. But hold on a minute. Does this company even have dividends? And if so, how are the dividends? R-I-L-Y. Okay, historical data. Okay, so Riley has been paying dividends since 2014, which means that's 10 years. Let's look at the numbers. 10 years ago, it was 3 cents. All right. That was 2014, 3 cents. 2015, 6 cents. Well, that would make me feel awesome. Double the dividend in 1 year? Great. What happens next? 2016, it drops to 3, then it jumps up to 25. Well, Then she drops down to 16 to 13 to 12 to 16 to 12, 30, 16, 8, 26, 50, 65, 35, 25, 35, 38, $3.50. That's a big jump from 38 cents to $3.50. But then it drops down to $3, drops to $2, jumps to $4, drops to $1 in 2022. 2023 it's $1, and then 2024 it's cut in half. So explain to me in a manner which I'll understand, because I didn't go to college, why you think that's a good deal. Okay, they go up, they go down, they go up, they go down. And what happened finally? Well, they cut the dividends. Look, went from 26 to 38, 38, blah, blah, to $3 to $2 to $4. Okay, no, it's kind of good going from $3 to $2, you're losing 30%. But at $2, it goes to $4. That's a 100% increase. Okay, what happens to that? Well, they cut it by 75%. Why would I want to jump in a company that cuts the dividend by 75%? And then to 2022, it stays at $1. 2023 is at $1. So there's no increase at all between 2022 and 2023. And then 2024, they cut it in half again. Explain to me why that is a good idea. I'm just curious. All right, so I'd say no to Riley. Sorry, but that's just me. Is there a full training video with membership? I saw a short video on the site only. KG, I have hundreds of videos on YouTube. I got a couple hundred videos on TikTok, a couple hundred videos on Facebook, a couple hundred videos on many. But do I have a training video that teaches you everything? I really should get one of those. You know, I'm not a marketer. I'm just some guy. I'm just some random guy on YouTube, random guy on TikTok. Found something that worked. I didn't even tell you guys yet how it came about. Now, some of you may not have heard this story. In 2008, when my daughter was 9 years old, she wanted to trade just like me. She saw me trading my computer every day. She said, "Daddy, can you teach me how to do that?" I said, "Sure." So here's the challenge, trying to teach a 9-year-old how to trade. It has to be simple, safe, predictable, consistent, and no way that she could lose. Now, I had to come up with some special rules specifically for her. Rule number 1, never buy something you don't understand, okay, or you don't know, or you would not want to hold long term. That's rule number 1. Rule number 2, never sell at a loss, because it's kind of like it defeats the purpose, okay? Rule number 3, make sure the company is consistently profitable, meaning 20 years of increased dividends. That was the rule for my daughter, 20 years of increased dividends. 4th, weekly options, because I want a weekly cash flow. I don't want to have to go back to work. I don't want to have to go back to work. Okay? I don't want to have to work for someone. I kind of like my life the way it is. So I have a certain amount of money. I get 1% per week that allows me to pay my bills. I heard Riley is going to tank. Okay. What is this week's list for watching? Well, this week, what week are we? That's July. We're in August, right? August 12th. All right, here you go, right here, this week. Apple, Capital One Finance, PPG, U.S. Steel, Clorox, Kroger, ExxonMobil, Emerson Electric, Hershey's, RTX, and Walmart. There's one missing right there. What is that one? I can't see it. Starbucks. Friday has a dividend this Friday. Starbucks. Nike. We already looked at Nike earlier today. It already did. Panko. Alrighty. AB, we already looked at that. Minty Fresh, we already looked at, CVS. We didn't look at CVX yet, which is Chevron. Chevron, CVX. Chevron. First thing, as always, the high, the low. look at that. The low back in January compared to, is that today's bottom or yesterday's bottom? That's pretty low. Look at that. That's the low. All right. Currently, the price is 145.48. So the 146s are going for 116. Not quite there. The 145s are going for 164. But I'm losing 48 cents right at the top. So you take 48 cents off of this. 14, 16? Is that right? 116? Yeah, neither one of those is giving me 1%. Sorry. Minty Fresh, sorry, it's not giving me 1%. That's what I'm looking for. Okay, but if you really like Chevron, take a look at the last 30 days. What has it done? All right, 30 days ago, we're at 156, tops out at 164, and the bottom was today, 138. So here's your 30-day bottom, today. So I'm looking for 2 days to the upside, because look at all the space you got. You got from 146 all the way up to 164. That's a nice long run, if you can isolate where the bottom is and jump in. All right, that being said, how do you sell someone the rights to it? Oh, Maria, awesome. Awesome question. You sell the rights of your stock, because first you got to buy it. First you buy the stock, and then you sell your rights away. Now, you can either do that with a call option or a put option. Now, I'm not going to cover put options because they can get very complicated and they can get very confusing. Right? And I don't like negative energy. Okay? Put is if you think the stock is going to go down, then you buy or sell your put. I just don't like it. Anyway, how do you sell your rights? Well, if I'm buying it at 145.48, right? That's my purchase price right there. The last trade, the bid, the ask, the high, the low, the open, the close, the volume, blah blah blah, all that stuff about the stock itself. Two entities: the stock, the option. The option, which is going to be a call option, is going to be called a covered call. So it might be a good idea for you to do some research on covered calls. Go to YouTube and do some quick searches. Simplify a covered call. How to do a covered call. What is a covered call? What are the basics of a covered call? However you want to look for that kind of information. The information is available on YouTube. You have a bunch of different people giving different explanations. It's kind of the same. You're going to buy a stock. You sell a call option for someone to buy it from you. So if I'm buying at 145.48, I can sell it at 146. So you call your broker and say, I would like to sell a call option or a covered call on my stock at 146, because that's the current price. I'm going to collect $1.16. That's a little bit less than 1%, but you get that premium right away. Now, in order to do a covered call, you need to own 100 shares or more. The stock shares are in 100 count increments. So 100 shares is one contract. 400 shares is 4 contracts. 1,000 shares is 10 contracts, so on and so forth. Okay? But when you do that, you buy the stock, 145, you sell the 146s, you collect this money. This money goes into your account right away. And if the stock goes up, somebody buys it from you at that price, and you're back into all cash, and you get to do the whole thing all over again with a different company, because different companies pay dividends on a different date. Let me see if I can briefly show you. Holy cow, it's 11:15. Okay. You see all these little green dots? Those are all the companies that are offering dividends. Now, there's a whole bunch here. Got to be at least 20. There's about 5 of them here. 41. It doesn't look like there's any, but they couldn't fit them all. There's 41 here. 63 on this day. 69 on this day. 86 on this day. 99 on this day. Let me get rid of this so you can see that better. 99 here, 86, 33, 45, 45. Look at them all. All these companies are paying dividends. How do you know which one to pick? Well, the list that I use are companies that have consistently increased their dividends for 20 years or more. Because I want to be reassured that I'm putting my money in the right place. Now, if you had your choice, right, would you take a company that is consistently profitable for 20 years or more and has been in business for 100 years or more? Or would you trust your money to a company that's, say, maybe 2 or 3 or 4 years old, that doesn't have any historical performance behind it? Yeah, it is easier for a smaller company to double or triple in size, where a larger company has more staying power, has more stability, safer bet. Now, I'm at that point in my life where I don't want to take risks. I'm 60 years old. Could I go back to work? Yeah, I could. Do I want to? No, I have other things I want to do. Okay, I want to help my mom with her house. I got to put a new roof on, new decks, kind of things like that. I want to help my kids. Okay, my son's needs, a lot of work to his house. I like doing those kind of things. I like hanging out with my kids and my grandkids. I like hanging out at the beach, at the pool. I like doing nothing if I don't feel like. I like to sleep until I'm done. Okay, but don't get me wrong, I like to work. I do. I grew up, my very first job was when I was 13. All right? Now, I've been working ever since, and I just retired in November. I'm still not used to it. I still feel guilty for doing nothing. But it is what it is. Okay, so that's Chevron. Hopefully that explains a little bit. Let's keep going. Uh, 86, you want to take a look at Nextera Energy, N-E-E. N-E-E. Nextera Energy. Ooh, look at that. That's a little too high for me, brother. Okay, here's the high of the year. Here's where it is now. Okay, there's still way too much profit here for me to ignore. All right, and don't get me wrong, I'm going to put Nextera Energy in 2 weeks from today. So hopefully, it's already written down. It's already written down for 2 weeks from today. So we've already looked at it over the weekend, and we decided, yeah, it's a good company. Let's take a look at it in a couple of weeks after all this profit has been taken. Because I'll tell you one thing, if I bought it here at 71, 72, and now it hit 80, yeah, I'd be taking profits too. My hair's a mess. Whatever. 46 questions, and we only got 15 minutes. How about Emma? Okay, Daddy Happy, we already looked at Altria. Okay, Altria, we already discussed that we'll take a better look at it next week or the week after because it's too close to the high. See, the high of the year is 51.25. Okay, and right now we're at 50.31. It's a little too high for me. All right. Kashif Yudin. Is this Skip Bayless? I have no idea who that is, so I'm going to say no, it's not. Alex. So you want short call to get exercise? Absolutely. Coney dividends are great. Well, Ramo, I hope you don't mind if I disagree with you. I don't like Coney. The numbers. Okay, take a look at how Coney did 5 or 10 years ago, and then get back to me. 86. Yeah, I think the goal. One play. Yep. Brian, Siri. Ooh, I'll write Siri down for tomorrow because right now it's 11:20. We've got 10 minutes left, and I still got 51 questions to answer. Siri. S-I-R-O. Okay. I got 51 questions to go through. I'm not going to be able to get through everything. Sorry. What about dividends if the stock gets called? Well, Alex, that's a good question. Okay? If you buy a stock, okay, before the EX date, you sell an option against it, you collect your 1%, 2%, whatever you collect, fine. And somebody exercises their option, well, if they own the stock before the EX date, they are going to get the dividend. Sorry, it's just part of the game. Poseidon's last molar. Does the buyer who exercises the option pay brokerage fees? Yes, they do. Okay, Happy Daddy, you asked me 4 times to take a look at Altria, and I did. Okay, Loudon, ASTS, never heard of them. ASTS. Okay, it's going to be a no only because, a couple of reasons. It's at the high of the year. Okay, that's number 1. Number 2, I've never heard of it. And usually, if I've never heard of it, that usually means it doesn't have dividends. ASTS. There are no dividends for this time period. Yeah, sorry, ASTS is a no. Uh-oh, I missed that. Wildcat Sam, Nordstrom's, huh? Uh-oh. I forgot what Nordstrom's was. JWN. JWN. Good. My memory does serve me. 2163, the 2150s, 31. Yeah, alrighty. 13 cents. Yeah, you're not going to get your 1%. Sorry, dude. And look where the chart is. Okay. Last 30 days. Right there. Alrighty. Take a look closely at the chart. Up, there's your high at 24. Comes down to 21. Shoots back up to 23. Drops down to 19 and a half. Shoots up to 22 and a half. Now she's starting to come back down again. Okay, she's ultimately in a downward trend, but up, down, up, down, up. Now she's coming back down again. Sorry, that's Nordstrom's. Where do you get your calendar information dividend dates? Linda, good question. Where do I get them? Well, you can get them at dividend.com. You can get them at dividend.net. You can get them on Yahoo Finance. You can get them on Google Finance. You can get it on, oh, you know what? You can go to Google and put in EX dividend date calendar. Okay? And then you can put the stock into the calendar and it tells you exactly when it pays the dividend. Tony Simmons, can I start with a small account? Yes, you can. My grandson started with $50. But then again, he's 4 years old. Okay? Now, me, the other grandparents, and mom and dad, we take our spare change, we throw it into an account. What do we put in, like $4 or $5 a week? I mean, $4 or $5 a week, it doesn't sound like a lot of money, and it's kind of not. But he's 4 years old. By the time he's 18, you're talking 14 years at 1% per week. Well, close to 1%. He doesn't get quite 1% all the time because he's using a different strategy. Kind of the same. We're looking at the same time frames, the same dividend stocks. He buys, 3.5 shares of this or 7 shares of that. And then he waits for it to move up 1 or 2% and then he sells. Well, I do it for him, but still. How are you figuring out the percentage you are making so quick? Ah, interesting. Okay, let's quickly go to this one right here. Okay. So I'm looking for 1%. You ready? 1%. The stock price at this moment in time is 21.63. So what is 1% of 2163? The easiest thing to do, you take the decimal point, move it over 2 spaces. So instead of 21.63, it's 0.2163, which is 21 cents. 21 cents is 1% of $21. Okay, the 2150 is going for 31 cents. That is over 1%. So after you've been doing it for a while, remember, I've been doing this for 15 years. Okay, now I haven't been broadcasting for 15 years. I've only been broadcasting since January. So I've been here every single night from 9 until 11:30 since January 2nd, and I've only missed 2 nights. One, I was sick as a dog. Second night, I had to bring someone to the hospital. That being said, Lorraine, I wonder, are you still here, Lorraine? If you're still here, send me a quick message. I have something to tell you. Anyway, is dividend trading different from covered call trading? Kind of yes, but what I'm doing is using the dividends, okay, Here's the dividend dates. Let's go to this one right here because you guys will appreciate this list. All right, check out that list. That's Warren Buffett's list. Okay, Johnson & Johnson, T-Mobile, Heinz Ketchup, Louisiana Pacific, Chevron, Jeffries, UPS, Capital One Finance, Apple, blah, blah, blah. So, what was I getting at? Okay, so I use the dividend dates to tell me when they're paying their dividend. Because there's 4 dates to remember when you're doing dividend investing or anything to do with dividend stocks. 4 dates. Date number 1, the announcement date. Self-explanatory. That's when they tell everybody what they're making. Date number 2, EX dividend date. Those are these little green dots. The last day the stock trades before the dividend is paid. That's number 2. Number 3, date of record. Whoever owns the stock on the date of record is entitled to the dividend. That is date number 3. Date number 4, self-explanatory, the payment date when you get your money. Okay, 4 dates. So if I buy it before the EX date, I get to collect the dividend. So dividend investing or dividend capturing, you buy before the dividend, you sell after the dividend date for a profit, and then you move on to the next company. That's dividend capturing. Okay, dividend investing, the way I do it, the way I taught my daughter is buy the stock, say Johnson & Johnson, the 27th, 2 weeks before the EX date on a Monday. Okay, that gives us all this week here to hit my target. If it hits my target, great, I'm back into cash on Monday. If I don't hit my target, well, I keep that money and I write another covered call on Monday. If I hit my target on Friday, great, I'm out, I'm back into cash. If I don't, I write another covered call. So I get premium, 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 dividend. If it hits my target, I'm out. If not, I do it again. And I keep doing it again and again and again until I hit my target. I have no problems whatsoever holding on to a good company as long as it's consistently giving me some profits on a weekly basis. I'm looking for 1%. Now, 98% of all my money is invested at all times. It makes it a little bit challenging once in a while, you know, when the kids have a problem and I have to, you know, take some money in my account to handle issues. But that's just that. All right. Pervy Sage, where do you get the calendar info? The calendar info, you can go to Google or Bing or any search engine and put in the search EX dividend calendar, and there's a whole bunch of websites that are going to pop up will give you information on the calendars that have specifically stock dividends on them. Now this one here that is attached to Think or Swim, okay, that's already there and available. You just come to the first line, go to the Market Watch, second line down, you go over to calendar. There's the little tabs right up at the top. See, it says monitor, trade, analyze, scan, Market Watch, charts, tools, educate, help, blah, blah, blah. And you click on the Market Watch tab, and the next tab that pops up, quotes, alerts, visualize, finance rates, in calendar. Okay? How do I get the app calendar? Do I purchase it from you? No. This is free. Okay? This is Think or Swim. You can download this for free on thinkorswim.com. Now, I don't make any money off of that. I wish I did, you know, because a lot of people, they download it and they use it. Now, Charles Schwab owns it now because they bought it from TD Ameritrade. Now, Charles Schwab will let you use it free for a short period of time, but eventually they do want you to open an account there. Now, I've had an account using Thinkorswim for about 20 years. I just recently moved all my stuff over to Charles Schwab. I had no choice in the matter because they bought out TD Ameritrade, who bought out Thinkorswim. So it is. I didn't like TD Ameritrade. I continually traded on Thinkorswim through Thinkorswim. That was like 20 years ago when it was its own entity. Oh, that's horrible. Ugh. bum, ba, bum. Marial Laws 4. Like to sleep till I'm done. Ooh, I love sleeping till I'm done. Normally, I wake up as soon as the sun comes up. Sorry, I'm just a country boy. Not really, because I was originally born in Boston. But we moved to, suburbs when I was like 3 or 4. Okay, I don't remember anything about Boston. How about AMGN? Didn't we take a look? Wait a minute. AMGN? Isn't that one like outrageously priced? AMGN. Outrageously priced. 320. So something about me saying I like stocks under 250 you didn't quite get? Or do you want to rub it in that you can afford AMGN and I can't? It is what it is. 320, I wouldn't be looking at it. It's a long way to fall. Now, don't get me wrong, 250 to 0, that kind of hurts. But 320 to 0, that probably hurts more. But anyway, here we go. 322. The 322.50s are going for 220. Yeah, no, it's not even 1%. No thanks. How's that? Is that quick enough for you? What are you thinking the PPI report does to spiders tomorrow? All right, JP, honestly, I don't pay attention to the spiders. I don't pay attention to the reports. I do know that they do affect the stocks, but I'm not doing this for, I'm kind of thinking what's the proper way to describe this. Okay, what I'm looking for is totally different. Okay, I'm looking at good, decent companies. I'm looking to buy good, decent companies and sell the covered calls against them. So what am I looking for? Okay, Amgen. Yeah, I probably wouldn't do this, but if I'm looking for a 30-day high, 30-day. Look at this is nice. 30-day top, 30-day bottom. She's jumping up 1, 2, 3 days to the upside. Great opportunity to jump in if it's going to the upside. If I liked AMGN, which I don't because it's a little too pricey for me. Okay. That being said, let's keep on going. But as far as dividend goes, Daddy Happy said something. I don't quite remember what he said. You got to remember, these questions, they come and they go really fast because I can't look at all of them. I wish you could zoom into the TV some. I can't read the small print. Oh, well, Daddy Happy, you're new here, okay? Because apparently you didn't know this. This screen here behind me, this is a big TV screen. This is plugged into my computer, and it is broadcast live on YouTube. Okay, so if you go to YouTube, hold on, where is it? Well, you could go to my website, the10minutetrader.com, okay, the10minutetrader.com, right here, see? Come all the way down here to my current trades for the year. You click on View All, and what do you come up with? Well, you come up to my old website. Okay, here are all my social media. This one over here, YouTube, all right? Very first thing you're going to see is 2 live broadcasts. One is just the screen, and one is me standing in front of the screen, basically what you're seeing here on TikTok. So I have 2 live YouTubes at the moment. One, the exact same thing you're looking at right now, and just the chart. Okay, so let's go back to just the chart. Okay, so just the chart allows you to be able to see these small numbers. So you can actually watch it on your big screen TV in your living room, or, you can watch it on your computer or your laptop. Okay, you really can see these numbers on a phone or a mobile device. Yeah, that kind of small. That's why this screen is live broadcast on YouTube. All right, we're past 11:30. I got a couple more questions and I'm done for the night. My throat's getting a little sore. What is a dividend? 23 Adam. 23 Adam, dude, you are so new. My goodness. Not that it's a bad thing, because everybody's got to start at ground zero. Okay, we're not all born with all this information. So, what is a dividend? Let me give you a brief little story on how it all started. The late 1590s, 1580s, 1590s, you get a bunch of Dutch businessmen get together and say, hey, let's create the biggest, baddest company the world has ever seen. Great. So they put all these ideas together and they said, okay, great, wonderful. How are we going to do this? We ain't got this kind of money. So they literally went door to door, knocking and offering the general public, and this is the first time it's ever been done, offering the general public, the peasants, an opportunity to invest in a business. And what did they promise them? Hey, Mr. and Mrs. Jones, whatever, you give us some money, we will give you this piece of paper that will entitle you to a portion of the company's profit, to a share of the profits. That's where we get the names from shares. And the very first dividend shares were sold in 1602. They didn't even have a stock market back then. That was the first publicly traded stock, VOC, which is the Dutch East India Shipping Company. They literally went door to door offering to the general public, you buy these shares and we'll give you a portion of the profits. Now, the VOC, Dutch East India Shipping Company, was in existence for 198 years, and they averaged an 18% annual yield through the dividends. They gave them a portion of the profits. They averaged 18% a year for 198 years. That's where dividend comes in. Now, a dividend is basically your share of the company's profits. Okay, so the company has certain expenses. Okay, you have the raw goods, you have cost of doing business, and you have the profits that go to the shareholders. Okay, and if the shareholders are consistently getting higher and higher and higher dividends every year, why would they sell? They would keep their money there. That way it keeps the company going. But once the dividends start going down, people start pulling their money out. So a dividend is your share of the profits. Hopefully that's simple enough. Got a couple more questions, then we're done. I can't believe you like M. I can't help you out with that one. How many different stocks do you keep in your portfolio? 300, roughly. Sharing is caring. Thanks for your time and teaching. Carlo, you're welcome. Is that coffee? Happy Daddy, no. This is absolutely horrible, nasty stuff. This is tea with honey, lemon, and bourbon. They call it a hot toddy. I got this thing in the back of my throat, won't go away. It keeps me coughing. I've been coughing the past couple of months. And I hate bourbon. Ugh. But it makes the cough go away. Guidance. Hey, James. What membership or options you have to use for those who can't attend your daytime streams? Well, you can always watch daytime streams after the fact, because I record all the morning trainings, and then I upload them in the afternoon after the fact, of course, because it wouldn't be fair to the people who actually pay to be there. So can I just buy a stock before it pays a dividend and receive that dividend, or do I have to hold? Ooh, you know what? Safeguard. I used to, when I first started trading, I stayed away from dividend stocks. I did, because I was under the impression, and this is what the establishment wants you to believe. They want you to believe the misconceptions. I thought I had to own the stock for the whole year before I could get a dividend. Well, no, you only have to own for a day. One day. If you buy it before the EX date, where's it right here? See all these little green dots? Johnson & Johnson has its dividend date on the 27th. If I buy it on the 26th, and then I sell it on the 28th, well, I'm going to collect that dividend because I owned it on that date. So you got to buy it before the EX date, and then you can sell it afterwards and collect that dividend. Perfectly legal. I call that dividend capturing. So yeah, I used to believe you have to own it for a whole year, but you don't. You have to own it for a day or two. Carlo, have you seen the movie Hummingbird? True story about stock trading. No, I haven't. AMG and dividend. Uh-oh. AMD's dividend is 2.25. Okay. AMGN's dividend. Okay, I have no idea what that means. Ashley, what stock do I buy if I'm a beginner with little money? All right, Ashley. Now, I'm going to say this to all you people here, because I say this every single night. If you really want to have a good, serious conversation, DM me with your phone number. I will give you a call and we'll chat. This is not for everyone. This is slow. This is boring. This is monotonous. I do the exact same stocks every single quarter. I've been doing them for the past 15 years. The exact same stocks every single quarter. It takes me 10 or 15 minutes a day. I take a look at who's up for consideration on the calendar. Then I take that stock symbol, I put it into the chart, see what the high is, see what the low is. I check what the number is. How much is it going to pay me? Is it my 1%? Great. It takes me less than 15 minutes a day to do that. Actually, the longest days are Mondays and Fridays. Because Monday I do all my buying. Friday, I jump in at 3 o'clock to see how all my positions are reacting. Am I making money? Am I losing money? Do I have to do anything? What does next week's look at? Where is the best place to put my money over the weekend? Okay, those are interesting questions. So, Ashley, what I would say to you is keep coming back, keep learning, ask questions. Because I haven't seen you ask any questions yet, Ashley. This is the first question you're asking. What do I buy as a beginner? Well, Ashley, there's 9,598 companies you can choose from. That's a lot to choose from. Okay, I don't know anything about you, so I can't tell you anything because I have no idea who you are, what you want to do, what your risk factors are, how much time, how much money, what is it you're looking to get out of it. I know absolutely none of that, so I can't really tell you anything. Oh, I'd like to be able to help you out. That's why I tell people, you want my help? Send me your number. I'll give you a call. We'll chat. Thoughts on SO, Southern Company. Bray, is that like Bray Lynn Riley? SO, we'll take a look at SO tomorrow. Have a good night, James. David, thank you. Oh, great information. Ashley, thank you. Take NAC for the cough. I have no idea what NAC is. It'll go away in a week. Okay, that'd be nice. I've had this thing for the past year or so. It won't go away. Macy's dividend payouts is all over the place. They even lowered. Please explain why you're picking it. It's not me. Well, let me see if I can explain it to you in a short format. All right? Now, I understand they have changed their dividends over the past few years. However, Macy's is over 100 years old. Macy's has name recognition that is very, very challenging to pay for. Okay, they've been around for 100 years. They put in their time. They put in their effort. They used to be a dividend king, which means they've increased their dividends for 50 consecutive years until recently. Okay, so it is a personal preference. Okay, they're over 100 years old. I have no problem whatsoever buying Macy's. Because you talk too much. Uh-oh. Ashley, because you talk too much, I hope you feel better. Thank you for your honesty and knowledge. All right, you're welcome, Ashley. Mini split. You better call it a night if you are tired. Yeah. I'm getting ready to call it a night. SD gal, San Diego gal, South Dakota gal. I don't know, one of those. Do you buy, sell stocks only or stock options? You're new here because if you weren't that new here, you'd know that I do covered calls, which is buying stocks and selling stock options. Okay, so I do both. Sounds good. I will be in touch. Thank you. All right, thoughts on ExxonMobil. Ooh, I like ExxonMobil. For members, how early you start if I want to watch you trade. All right, guidance, okay? I have no control over that whatsoever. The stock market opens up at 9:30 a.m. Eastern Standard Time, so I jump online with all my morning traders at 9 a.m. This allows us to go over a bunch of stocks before the market opens. That will give us a better idea of what we're jumping into for the day. Now, we do most of our tradings on Mondays and Tuesdays. Wednesdays and Thursdays, we just kind of look, just get an idea of where everything is. Friday is a very important day because options expire at 4. We want to make sure that our positions are profitable, and then we try to plan for what's going to happen next week. So we jump in at 3 so that everybody has enough time. Now, the more people join in, the earlier and earlier on Fridays we will jump in. All right, Pervy Sage, AT&T or Verizon. We actually looked at both of those last night, and we looked at both of those again earlier today. Okay, guidance, you're welcome. James, recommend starting investing principal. Okay, James, my advice on starting principal, yeah, don't. I mean, go to download the Thinkorswim onto your computer. They have an option that allows you to paper trade. You're kind of like playing Monopoly with dividends, with the stock market. So yeah, with Thinkorswim, you can do cryptocurrency, you can do Forex, you can do futures, and you can do stocks and options. Okay, there's a lot of information on Thinkorswim. My suggestion to anybody new starting out is get a paper trading account. Find a strategy that works for you. Covered call is one of the simplest and safest trading strategies there is. Took a notebook and pen and have been taking notes. Going to message you in the morning. Well, you're all eating. We'll be hearing for you in the morning. All right, that all being said, it's past 11:30. I turn into a pumpkin at midnight. I'm a little on the tired side. I will catch you guys tomorrow. Guidance. Please drink some water or beverage and get some nice rest. Appreciate all you do. Well, believe it or not, I get water with honey and lemon for the throat. I got plain water, and I get this stuff, which I call toilet water because it's horrible. It's tea with honey and lemon and bourbon. It's supposed to, whatever it does. And it makes me cringe every time I drink it. Yuck! Yeah. It's horrible. I don't like alcohol. And it tastes absolutely horrible. But anyway, it makes the cough go away more so than others. All right. All that being said, it's horrible. Actually, think about it. It's anyway. You guys have a great night. We'll see you again tomorrow. And for you guys in the morning trading group, we'll see you first thing in the morning. Have a great night, and we'll catch you guys again. So, Lorraine, you didn't call me back, so I guess I won't have to tell you. Buy on Instagram. Buy on TikTok. Michael David Robinson. Haven't heard anything from you tonight other than good night. Nice to see you, brother. Talk to you tomorrow. YouTube. Bye, all.